guys, sorry to interrupt your video. Just a quick plea, subscribe to my channel please. If you haven't done it already, subscribe. Tell your friends, subscribe. Thanks. Right, calculated premiums. So how do they calculate your premium? Right, they take into account many factors, including but not limited to all of this stuff that you can see on the screen. Alright, so your age, car's value, type of car, like convertibles because they're easier to break into, and so on and so forth. Any previous convictions you might have got for speeding, drugs, drinking, you name it. Insurance group of the car, how many miles you drive each year, where you park at night, what postcode you live at and where you work, and therefore the postcode where you work. Is it a secure car park or is it out on the street? What security systems have you got fitted to the car? So have you got an alarm on your car? Have you got one of those things that you put through the steering wheel, for instance? A Thatcham approved category C, is it? Or 3 or something, which is the ones that goes through the steering wheels. And of course the number of years of no claims discount that you might have. The sex that you are. Women crash more often than men, but they have cheaper accidents, and overall therefore they cost the insurance company less, and therefore they are a lower risk, and therefore they get lower premiums. But hang on, EU directive on gender equality. I bet you that's what was springing to your mind, wasn't it? Well, insurance companies worked around this because we're not allowed to discriminate against anybody based upon gender, race, all that sort of stuff, religion, all those sort of things, and rightly so. However, what that meant was originally women used to get a discount because they were safer drivers, well, cost less, and then their premiums went up because equality kicked in. But of course that means that they were now paying additional premiums even though they were a safer driver, and so they've sort of got round it on occupation. Right, so this is quite interesting, the occupation. So you've got highest risks included fruit and veg pickers, waiters, builder labourers, factory packers, and lowest risks included retiree, secretary and personal assistant, clerical assistant, medical secretary and secretary. Now, it's interesting that many of the jobs in the lower risk are traditionally filled by women. So that's how they're starting to get around it. So since the EU directive on gender equality made it illegal to price car insurance differently for men and women, some insurers get around this by making certain jobs a lower risk factor instead. So you still get your discount for being female, but only because females tend to gravitate towards that type of role. Don't shoot me, this is coming off Money Supermarket, alright? Right, it's worth noting that the occupation is not the only factor here. Typically certain occupations are held by certain age groups. Okay, so occupations at the most at fault claims, I found this interesting, there's all your doctors and stuff. So you've got general practitioner, claims adjuster, hospital consultant, hospital doctor, surgeon, health visitor. It's all these healthcare professionals, right? Maybe they were surmising that maybe it's just they're under a lot of stress. They've got a lot on their mind. They're not really thinking about very much, so they keep cracking into the walls of the car park when they're leaving the multi-storey car park at the hospital, for instance. Least likely to make a fault: barman, fruit picker, and packer. But hang on a minute. Fruit packers are listed as the highest risk and the least likely to make a claim. Right, and it's the age aspect of it, alright? So it's not necessarily the fact that it's a fruit packer, it's the fact that fruit packers and pickers and things like this are generally taken by people who are younger. Alright, the size of an accident also affects it as well. So a doctor scraping a bumper a number of times in a car park, yeah, it's going to be 300 quid here, 300 quid there, but overall he might do a number of different accidents, but the overall cost is quite low. Whereas somebody who's tired, who's been working all day doing manual labour, who's a youngster, and therefore unfortunately youngsters are inherently risk takers, so they're more likely to be driving too fast for situations, don't have the necessary skills that you gain over many years of seeing just those little nuances, so they are more likely to crash than somebody who's older, basically. And when they crash, they don't have to do it in a good way. So generally the older person tends to do more little crashes which are cheaper, whereas a younger person tends to do it with gusto, and when he crashes, by God doesn't he crash, and he might wipe out or write off a car. Okay, so there they might crash, not as often, but they cost a lot more. Okay, so policy excess. You'll see this coming up in your theory a lot. So a policy excess, also known as XS, is the amount you agree to pay towards the cost of any claim on your insurance policy before the insurance company starts to pay out. Right? The more you agree to pay towards any claim, the less likely it is that the insurer will have to pay out, and therefore the cheaper your insurance premium will be. You get two types of excesses. You get compulsory and voluntary. Compulsory excess means you've got no choice on this one. All right, some insurers will only offer insurance, especially to a youngster, if you agree to pay the first 300. So they're saying they will only pay in excess of £300. That's why it's called a policy excess, right? For example, but that £300, that could change. It might be 500, might be 100, who knows, right? But they will say, yes, we will offer this teenager an insurance policy, but the agreement is that they will pay the first £300 of any claim, right? Then you get a voluntary excess. Now, this is one where you can state, well, I will pay I will take more risk onto myself, but in exchange, I want a discount on my insurance because the insurance company isn't as exposed to as many claims. So, for instance, if you had a £1,000 excess on your policy, that's an awful lot of hitting lampposts and bending bumpers and doing all sorts of stuff that the insurance company will never pay out on. So the chances of them paying is very low. Therefore, they give you a discount on their insurance. Of course, you might still maim somebody. There might be £1 million claim coming. So you still have to pay them for it. But the everyday knocks and scrapes and all the rest of it that a lot of people claim for won't even get to the insurance company because you've got a high excess, and that's the idea. So you decide how much risk you want to take, and then they will give you discount or won't on your insurance premium. That's the idea. So when you take into account the compulsory amount that they stipulate, and then you can add a voluntary excess on top of that, that combined makes your policy excess. So in the example that we've got down here, if you did £900 of damage, because we've got a £500 excess, you will pay £500, and the insurance will pay the additional £400 to clear the £900 bill. But if you only cause £350 of damage, you don't even get to your £500 excess, and so therefore the insurance company doesn't pay a bean. Right? So should I increase my voluntary excess? Well, it's up to you ultimately, but do bear in mind that a claim can occur at any time. Do you have the amount of excess readily available in your bank account all the time? Because a claim can happen any time, right? If you can afford to pay out your excess amount if asked to, then why not get a discount on your insurance? So if you always have £500 in your bank account and you can afford to just watch it disappear one day, then why not get a discount on your insurance? But if you never have more than £50 in your bank account spare, then I wouldn't have an insurance excess on my policy more than 50 quid, because if it suddenly turns up, I can't pay it. All right. You normally, it does vary quite a lot. All right. But in my experience, for every £100 I agree to increase my excess by, so if I say yes, I'll have £100 excess, I typically get £30 to £50 off my premium. Depends on what your premium is to start with, of course. It's all percentage, so the higher your starting premium, the more you would get off, effectively. Anyway, so question is, how risk averse are you? Are you prepared to take the risk of getting a £500 bill or 50 quid bill or whatever it is out of the blue in exchange for a cheaper premium, or would you rather pay up front, pay the whole premium, knowing that if a claim turned up you don't have to worry about it because you don't have a sudden high bill turning up on your doorstep? It's ultimately up to you. It depends on how risk averse you are. Okay, here's a good top tip for you. I learnt this from one of my students. It won't be clearly applicable to a lot of people, but it worked for him and it's not a bad idea, right? So age and no claims discount make a massive difference. So try and build a no claims discount whilst you're doing nothing. Intriguing. Right, so let's see what he did, right? So he bought a Group 1 car. He bought a Citroen 2C V6, which is a donkey's old car from 1960 something, right? Paid very little for it. I mean, I've put 100 quid in there, but I don't think he even paid that for it. I mean, so it's worth nothing, right? He declared it off-road, so he didn't have to pay road tax, right? He insured it for the absolute barest minimum. So if you say that you're not even driving it on the road, you're basically just covering it so that it doesn't burst into flames, and say it's only worth 100 quid anyway. There's no risk of you hitting another person out there on the road. It's not on the road. They're only covering it if in the eventuality that your car bursts into flames, which is very low risk, so therefore the insurance premium is really low. He then kept it at his parents' house. I can't remember if he put it in a garage or not, or if he just left it under a tarpaulin on the driveway or something. But basically, he then went off to university for 2 years. So he's paying a really small premium, knowing that whilst he's away at university, not even driving, he managed to get a year's no claims bonus. And after 2 years, he came back. He's got 2 years no claims bonus, which entitled him to like a 15% discount off his motor insurance. Which, when you think about the first time you have your insurance, when you actually buy a half decent car, like go and get a Fiesta or Focus or something or other, the insurance premiums, you're talking a couple of £1,000. So if you can get a 15% discount off that, that's worth having, you know. So he just did that. Then he sold his Citroen anyway when he came back again, and he was 2 years older. Of course, age has a massive factor. So now he wasn't 17, he was 19. So not only was he 19, but he had 2 years no claims bonus with him as well. Not bad idea. Good tip on his behalf there. So I'll just pass that on to you. The other thing, of course, is the car that he bought was really old, and if you have a car that is 40 years old or more, then it's classed as a classic car. It's a rolling basis, so it's 40 years or more, and if it's 40 years old, you get free road tax. Interesting, you still need to tax your car, but you just don't pay for it. So you have to apply for a road tax disc, but on the disc itself, although it's all online now, but originally it used to be a piece of paper, and on the thing it just says amount 0, but you still need to have that. You can't just not tax it, you just don't pay for the tax. Weird. Anyway, hope that makes sense. And you don't need an MOT, but of course if it doesn't need an MOT, the point of an MOT is to prove that your car is roadworthy, so that you're not in a death trap. So classic cars, cheap, but I personally wouldn't recommend it for a teenager, because those are the people who are most likely to smack it into a lamppost, and you don't want a rust bucket if you're smashing into a lamppost, because it'll fold around you and you'll die.